Okay, so right here on the main, okay, so in blue you have the VWAP. This is the 930 VWAP, which is usually the one that you have on every platform. It does not include the pre-market data, which I actually prefer versus the one with the pre-market. And above it, you have every steps of VWAP that is, I have an algorithm that calculates 30 days of data, and it calculates VWAP offsets. You have the yellow one, that's one level, then orange, then this kind of teal green, and then green. Um, Pink is the average. It's rare that it actually ever goes above the pink.
So this is a 1 minute chart, just to recap. This is a 1 minute chart. It's anchored to the start of the session and it doesn't include any pre-market data. So it's kind of like a daily anchored VWAP, right?
Correct.
And
Is
and it's
one
your standard VWAP. It doesn't have any special programming. And the purple one is again?
The purple one is the multi-day, which would be the 1 minute. Once say on Zoom, you can see it starts at 9:30 on the previous day.
Okay.
So this is equivalent to 1 day, 1 minute chart VWAP, which is what the hit the bid members use, except it does not have the pre-markets, which barely affects it in the first place.
Okay, so this is your multi-day, and we're running off of a 1 minute chart, just the same way that Hit the Bid does, except you're excluding pre-market data for both your current pegged day and your multi-day VWAP, which is the purple, right?
Correct. The
Okay.
multi the problem with the pre-market is that the pre-market data is seems to be only valid for the day that's running. And when I calculate my VWAP offsets, I use all 30 days worth of data, and it gives wrong readings. And that's one of the main reasons why I do not use the pre-market in this setting. If I need to use it, then I have another chart that shows both the 930 and the pre-market, which usually it's the same except if there's some very massive volume, which I can show later on with the other charts. But as is, the purple and the blue are the same as what you'd be using on the 1 minute, 1 day without the pre-market data. Like I said, pre-market, usually it's the same thing. It's rare that you have so much volume that there's a difference. If there's a
Okay.
difference, usually if it's because there's a very huge spike of data right before the open of the market.
And how are you using these bands now? So we know this corresponds somewhat to the way Hit the Bid uses this, and the cues tracked above VWAP, and then they went over the multi-day and came back. So how does this band add an extra level of sight to the market?
Okay, so what I found is that bands actually follow the charts. The stock price actually follows the bands. The stock will vary between the bands before changing bands. Um, let's say over here we have the first band goes to the second. Over here, because there's the limit of the multi-day, that's why it kind of stopped off. But it trades between the bands before moving along. Uh, Beginning of market is a bit more hectic, but they still follow the bands. Well, I'll show you with random charts after. Um, so before I show just talking the bands, I want to talk about the other lines behind it because they do affect the daily technicals. So I'll just hide it for now. So as Kenny was always saying, that we always use the beginning of the day high and lows and open, as well as the close and pre-markets highs and lows. So here I do have them. So the green lines over here are the beginning of days highs, low, and open, which are all green. And these are, as Kenny was saying, and these are very important. They do create resistance and plateaus, resistance and supports. The red line is the close of the previous day. The purples, like the wine color, those are previous day highs and lows. So you have one on top over here at 291.48, which would be the previous day highs, and the other one at 282.79 is the low. I have labels at the top that tells you those values. The brown one is not showing because I don't have the pre-markets on that chart. However, on this chart, I do have them. I hide the pre-markets highs and lows on the other chart because I don't have the pre-markets. On this one, you can see they're over here, high and low of the pre-markets. They're in brown. And that is from the previous day. So that's just these are supports that I keep on my chart in addition of the bands. So let's go, I'll put those back. Okay. Someone type a stock, any stock in the chat. Who wants to see what happened? Neil. Okay. Okay, it takes a few seconds to calculate the bands. I do have a lot of charts open, so it's a bit slower. Okay, at the top, so the top, while this loads, we have the three labels on top for the today's data, yesterday's data, high, lows, and close. And before market, that's the pre-market, which is hidden on this chart because I don't have it up. I show the value of the multi-day in a label. The steps over here is the calculated value between each step. So if you actually need to use it as limits or trailing stops, which is what I use this value as a trailing stop, and the percentage worth of the stock. So the percentage can be used if you want to calculate your loss. Let's say you want one step to be $100, then you take this equal to $100 would be the number of shares you would own, and that would be your loss for one band. Over here at the top, all the other labels are the values of all the bands, where the center point is the blue, and then you go up and down. So Neo, at the start of the day, you see there's a massive gap, and the VWAP offsets actually shows the limits of the high and the lows of the price increase. So if I zoom in this over here, as you can see, as it comes over here, it really trades between the orange and the yellow. And once it breaks down, then it trades between the yellow and stays to the blue, then drops down and then trades between the blue and the yellow, let's say the -1 level. This is also the previous day's close, but we don't see any kind of major resistance with the close. It's really just bouncing between the two bands. Each band can be viewed like a multi-day VWAP equivalent. Here it breaks down and goes down, downs, up. Usually what happens is once it reaches down, it goes back up, and then either it goes down to break or back up. In this case, it went up and broke down to the other one, and it trades a little bit over here, just touches to the penny to the third level down and back up to the orange. And this over here is the day open. So then you have the open and the -1 level causing some resistance around the 10:30 time frame. Like when we unzoom a little bit, it shows how the stock actually follows the bands rather than follow some kind of linear channel. Let's see if I can chart some parallel bands. Is this it? Yeah.
So what are those bands based on? Like, are they like
They're VWAP
VWAP
offset.
stuff? Like,
Yep.
what's the math and view? Okay, so they're percentages offsets or calculated in a certain way.
It's calculated in a certain way. So
Oh, okay.
it is the exact VWAP. As you see, you can see the blue is
Mm-hmm.
the VWAP, and the bands are identical to the blue one, but just offset at negative and positive. And the steps in this case are let's say 0.2. So between each one over here, you have 0.2, and that is your band level of the Neo for Neo.
And how did you decide that, or did it just take that? Does it calculate it and decide it for the stock that you're looking at based on the VWAP, or is that some variable that you have to input yourself?
It's calculated automatically. I won't say how right now, but it's calculated over the 30 days and it's valid for that one day. So beginning of the day, it's already calculated, it's already set. As long as you don't have the pre-markets, it will not change overnight. So as soon as the 4 o'clock hits in, the values for your next day are already ready to go. It's rare that it actually changes. Sometimes they'll stay the same for a few weeks. I do have a back testing that I created. That is how I actually found how valuable this was with the back testing. I'll put it aside because it takes a little bit of time to load all the data. Okay.
And how do you find that this works with, say, Jello's multi, like the white line that he does for price discovery, and then he draws all those lines off of that. Does this correspond well or in any way with that
I actually find this one better because it actually always
white line that he
trades.
has going through the price action?
Um, I do have it on one of my charts. I'm not a big fan of that price discovery. I rather have the high lows. I've just noticed that the market seems to follow better the high lows rather than the price discovery equivalents. I see where Jello uses the price discovery. It makes the chartings smoother and easier to read. Let me pull that up. It's somewhere in here. So this on the left has Jello's equivalent of the price discovery, which is a 2-bar VWAP. And I will pull up on my right. This over here, it does not show up. Let me pop this one out. It's more of a preference than comparison. Um, the the price discovery, like I said, he uses a 2-day VWAP. It smooths out the curves. When you look at the chart over here, you have this little gray line that goes in between. Um, just smooths out, and you have the plateaus that are automatically generated. But I've noticed that just personally, that I rather have the high values rather than the price discovery plateaus, which will pop up over here on the left side. I have so much stuff open that.
So do you find it cleaner? Do you find
Yes.
it cleaner or less
Actually,
or more confusing with all of that on there?
um, the plateaus at the highs, I think I find them more accurate, but that's just a personal view of that. As he uses the price discovery for when the current 2-day VWAP is breaking a range, so you're always 1 or 2 bars late on the plateau. So you might be, if you're using trailing stops, you might be stopped out faster, waiting for price discovery if you're in the position at the same time. If you're waiting to go in, um, then you're lagging behind by 2 bars. But I don't really want to just talk about that too much. Come on. Okay, so on the left you have the price discovery, which you have this line going through and plateaus generated with those lines. And on the right, you have the highs. The plateaus are generated from the highs rather than from the price discoveries. It's that's the difference between the two. It's really up to you on how you're trading in terms of these plateaus. Do you understand what I mean with the left and right over here?
Yep, I got it. So Jello's price discovery is weaving in and out through the price, and yours is showing it at the highs and lows of that price action.
Correct, which is what I think the market or the retail traders tend to use. They tend to use the limits that tells them where the plateaus are and what the maximum would be, and wait until that breaks rather than a price discovery being beaten and open up by its own price discovery.
So this is kind of somewhere in the vicinity of where Jello draws those lines across once he gets the price discover from his price discovery line. It's kind of mimicking the outer bands that he uses off of his previous price discovery.
Um, no, the bands are completely different.
Sorry, I don't mean your bands. I mean he draws. He has like a red and green sort of stepping
Yes,
like you have.
yes. So
Yeah.
mine are gray. The reason why I use
Yeah.
gray is that I can forget it if I want. It's kind of a background color. It's almost the same color as the grid. So if I don't want to focus on those gray lines, it's easier for me to just ignore them.
Okay. So I think we all got that. So
Okay, so I'll move those back out.
hi, Joseph.
Okay, so if we come back to the bands, usually the stock will bounce between two bands before moving to the next one. Um, it's every now and then you'll have a move of two bands that will not be that won't have any kind of pullback. Those do occur. I counted some for statistics a few weeks ago just to know what to expect when I use these bands as references. So just as reference, over 30 days of data, there was 107 occurrences where the price would move up two bands without any retracement to the previous band or through at least half a band. Like you'd see over here from Neo at actually 1 o'clock, you see it goes from the yellow line all the way up to the teal line. That's one occurrence where there's no pullbacks. And through 3 days, I calculated 107 of it, and that was only happening 24 days. Um, an extra 23 occurrences where it moved up 3 bands in a row. Um, 9 occurrences, 4 bands, and only once it did more than 4. So the really from one band to multi bands becomes extremely rare. If we add them up all together and just use the basic stats, every time it goes up 2 bands, there's only 23% chance that it will go up to a third band. It's just kind of statistics that I wanted to have while I was trying to study how these bands were mimicking so much the market.
So it's almost like as they increase away the standard VWAP, you get a drag coefficient on them, right?
Correct, and they tend to trade between those bands. So it's like a dynamic resistance and support as you go along. It's not basic lines that you set up the previous day for the next day, and then you have so many lines that you pretty much have a line every 5 cents, and you see that everything works because you have so many lines. In this case, you only have a few lines, and it moves with the market. Actually, it moves with the the VWAP, and you see the range also moves with those bands. NEO is a very volatile stock. We can look at some previous days bands over here. So this is back testing. Each band is independent. Um, the offset is calculated for the current band. So this band today, these bands are calculated for today, but they seem to be good for a little while because there was no big movements. The big movements are big movements and big volumes are what generates different band values and offsets. Let's take this day for example, just a random day. You see over here at the open, it goes up to the band moves up, the VWAP moves up, and the band moves up. In this case, the VWAP is orange. When I did backtesting, I had different colors for the VWAPs. That was for some other purpose, but in this case, I just reused some code and used purple lines and a purple gradient to blue for backtesting. So those are the bands compared to the orange line, which would be the VWAP in this case. You see, as the price goes up, the VWAP goes up and the band goes up, and it keeps scrolling to that band. Goes down to the bottom of the band, crawls to the band, which usually means that you're going down. Just like on the multi-day, if you have a stock crawling on the multi-day, usually it will tend to go to break it underneath. So all these mini bands can be seen as the same thing. Actually, in this case, at 10 o'clock, this is actually the VWAP. See, it breaks underneath, goes back to the VWAP, then crawls to the band, to the -1 level band, and right there it drops down directly to the next band, like no stop, directly to it, crawls to it, and then goes up past the band, past the previous day close, and then uses the previous day close and the low of that day as support between that one and the VWAP. This is VWAP trading at this point, and goes back down. In this case, it goes down one band. Here's a small retracement before it goes back to the band itself, to the penny, and then down two VWAP, two bands in a row, comes back up and goes back down, falls to the last band, and then after that goes back trading into the range, breaks the range, go back to the top. Like you can see, the stock always follows the bands. When it breaks, it just trades between those bands. Let's grab another random day. Okay, the VWAP on this one is the yellow greenish in the middle, because this is backtesting. So okay, actually I want to see that end of day. Okay, so right from the start we trade above the VWAP, crossed under the VWAP, and keeps touching the -1 level. It never breaks it down. It just pings it, then goes back, breaks out the VWAP, and just pings the first offset of the VWAP. Then trades around it. The red line over here, as you can see, is the previous day close. So this is an important resistance or support. And at this point, you see it as resistance. Goes back up. Once it breaks it, it pings the first level, just like it did previously, and then just drops to the opening price. So you see this green line over here, that's the opening of the day. Like Kenny always says, those
So
lines are very important. It's being used as support right now. You can see like this head and shoulder,
right,
whatever.
so the your previous day's highs and close and the current day's the pre-market stuff highs and close, that's in your script to fade off and on until you highlight it, right?
This is a different indicator. I just added
Okay.
to it because I've noticed that those lines are so important for resistance and support. And Kenny is right, and all the other traders who use it are right. As you can see
Hmm.
over,
But it's just that on this chart you have it fading off and on until you like kind of highlight into it. So it's like we can't see it all the time.
oh,
We can't
okay,
see the price there.
yeah. So
You know what I mean? It's not turned on all the time, so we're not able to see that, oh, the price, see, because the price bounced between one of your lines plus a VWAP, which was an important level in the pricing structure pre-market or previous day, right?
yeah, I'll just make them uh, more visible. Oh, not for this one because this is the backtesting one. So there's hundreds of bands as you can see over here. It's non-stop lines because each one is calculated differently. I can show it better on the other chart on the 1 day once we get back to that one. Um,
Okay, but when we're looking at this and we see these lines flashing up, that has to do with previous day price levels and everything. So when people see them fading in and out, that's actual prior pricing highs and lows and stuff, and
correct, correct.
It's not VWAP, it's just high low action of current
Yes, those are yes,
pre-market and
correct.
okay.
Those are straight lines that go from left to right. If there's any doubt on the values are usually written at the top, but since this is just random back testing, I don't show them. There's too much data. Okay, so from here we see it bounce. I have the open highlighted. You can see it bounce between the open and the high right over here. And the yellow line is the VWAP and then goes back, breaks the VWAP, bounces to the open, bounces to the VWAP, just like Kenny and Joe always talks about. These are reversals. Then we have the first level, the -1 offset, which is used as a slight bounce, kind of a small resistance, just like the multi-day, and could not bounce off of it and just broke down to the next level, which is the -2, where my arrow, the two small arrows indicate the volume spikes. It bounces off right to the -2, then goes up to the -1, goes back down to and breaks the -2 halfway there. The bands are multiplicatives offsets of the calculated bands. So sometimes you'll have a middle one that's not seen that could be charted. Originally, I had only half these bands, and I've noticed that there was so many in betweens that I added the -1 and the -3 level pretty much to it, and it helps so much more. And at some point, it becomes there's too many lines, and there's no point in you don't know what line is what anymore. So you could always see another half line if you want to consider it. I just consider it when I use trailing stops. I either use one or 1.5 or two bands as a trailing stop. Um, then from there you have a 2 two two band jump all the way up to the VWAP, which is the yellow one, and then right above that's the days open. Trades around that, trades in that range and in the opening. You see over here it kind of switches from between the opening and the VWAP to the opening price and the first band. Like it slowly transitions between the two and then breaks.
Point something out here. Just if you go back to this, I guess it's 11 o'clock. You see one of those ass cracks that Jello was talking about, and it happens to ass crack on the purple VWAP line. So I'm not looking at the sun. You're at 10:44. Go to the right a little bit. I think it's 11:30 where it broke down, right? Yeah, it goes up. That's the bottom of a V, right? And then it goes up to the ass crack, as they like to call it. It retraces back down, and then it breaks that center purple band, and then it blasts off and goes back up to VWAP. So that would be like an ass crack setup break that they're talking about. But it's just interesting that that ass crack right there is on an actual VWAP. It ass cracked right on a a sub VWAP. So I just wanted to point out. And so I'm finding I can actually, on this particular item, I can, like Jello says, okay, so once the price breaks the VWAP, they basically have a VWAP, they have an hourly, which is sentiment, and then they have the multi-day, right? But then you have to start drawing in all these different price levels, um, which you're not showing the steps, right? But the highs and lows. But you have to start drawing in all these price levels to expect the price to bounce off to give you kind of a guideline once you get from, say, the VWAP and it's heading up to the multi-day VWAP. You really have no understanding, and now you're busy drawing and chasing lines and things, whereas this appears to say, oh, we have the previous day's high coming into play now. Now we have an offset multi-day coming into play now, and blah, 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 blah. So you kind of have a guideline that way, and you're not conflicting your brain with trying to draw out price lines in advance. You kind of can see it's all sitting there, and you're like, oh, when we get to this place, we're going to have issues or rejection or something like that.
Correct. So it moves with the market. It moves with the VWAP. I don't know how it moves so good with it. Just like when we look at this massive drop over here, we see the first drop closes right to the previous day close, goes back up almost to the and the +2, drops down to the days open, which is the same technicals that we've been talking about, then goes up, then breaks the VWAP all the way to the -1, almost to the penny, to the -1, then breaks again all the way to the -2, goes back up to the -1, then goes through -2 all the way to -3. I'll zoom in a little bit so we can see. Over here, we're already at -3. Then trades underneath, goes to the -4, which is the furthest band that I draw, because at this point it becomes so rare that we go that point that I don't want to have too many charts and have small charts every time I open them. That's the main reason why I don't have more than that. But it can be calculated easily by using the step. So the step in this point over on the Qs, we're at 0.8. So at this point, we're at 275.5 minus 0.8. So 274.4, 274.7 would be the next band. 274.7. To the penny to the next band. And then the next band underneath would be another 0.1, so that would be 273.9 which is right underneath the chart. So it did not go to the 1, 2, 3, 4 to the fifth to the sixth. It went to the fifth to the penny, and then bounced back up um, through almost straight through to the -2 over here. So it bounced between this one just a little bit and back up. Almost touches the -2, trades on the bottom, then goes back down to the average. The brown one is the average in this case. It's rare that we ever go through that. It's kind of my limiter to say we're going to hell or we're just turning around from there. It's rare that we ever stay down underneath that average limiter I kind of use.
So how are you using this to place stops and things like in the price action for the trading? Like Kenny will be like, well, you don't want to, I'm going to give it this candle to the bottom of this candle to, to be out. And then I'm going to give the rest of it to the bottom of this candle. So sometimes he'll give himself a varied stop loss to say, I got to, like say VWAP isn't around. He'll say, okay, I've got, to the bottom of this candle, you're going to think about getting out. If you get to the bottom of that candle, you're totally wrong and get out of what you're at. Are you using that action, or are you using these VWAP bands to help you judge your stop loss and that
I
sort of thing?
actually use both, either the bands or I use a trailing stop equal to the step value. So on the top label,
Mm-hmm.
you have steps of 0.8053. So I just use zero point 0.8 as a trailing stop if I use trailing stops on a non-volatile market. Let's see, on earnings mornings, you would not use just one band because you'll most likely be stopped out. The moves are so intense in earnings mornings that you might want to use 2 or 3 bands worth of risk. Um, and that still depends on your risk. If you just want to have 2 bands as a risk, you just use 2 bands. You can use 2.5, 1.5. It's up to you. It gives me a nice idea of what we're trading, the trading range is for limiter.
But will you also take the action of the candles in there? Like I noticed Kenny places his stops based on the action of the candles. He's saying, well, you had these 2 candles and the price couldn't get through these 2 candles, or this is the candle it broke down on, or that sort of a thing. So he's kind of using his stops there, or using a combination.
Sometimes I do take the combination if I see that they're very close one to another. A price target or a low of a candle is close to one of the bands. I might use that instead of the bands, just as an extra little safety. And as can you say, I recall him saying, if you're going to lose $100, why not just lose 110 for an extra 2 or 3 pennies? So not to be stopped out. Uh,
And how are you finding this helps you overall in the trading versus the stuff the charts with the 3 lines the 3 VWAPs that they
well, the
have?
3 VWAPs are still in this chart,
Yeah.
so I still use those as reference. It's just that these bands tell me where the stock is either going to maybe give me a retrace so I can use it as a bounce. Often you'll see it bounce from one up to down
Mm-hmm.
from these. So let's take a less volatile market, less volatile time. Um,
Oh yeah, that reminded me. So what you're saying in really volatile, you won't use the white indicator, the white the value up top there where it says, I can't read it, but it's your offset. Yeah. But that is something you could potentially use kind of after lunch in the afternoon when it's slower, when Jello is saying, oh, you can only expect to take 10 to 25 cents out of these moves. You're not going to get the same moves and the same action as you do in the morning session
exactly.
as you do in the afternoon. So this would kind of be a good you're finding that this would, when the volatility has fallen away, that would be a good indicator for, say, using a trailing stop in the afternoon session, or when the session slows down or gets choppy or something like that.
Exactly. During the mornings, I'd use maybe two steps worth if I'm using a trailing stop, or maybe three if it's an earnings day. Earnings, you're either on the right side or on the wrong side. So um, if you use a trailing stop, it's to limit your losses and take some profits if you're up higher. I'll use the bands to take profits. That's a way also that I do is once it breaks either half a band, I'll take half off, and then use the band as my stop. Then you lock in your profits real quick. You might not get the whole move because of retrace back to the band, but you took some profits, you didn't get any loss. That's one way that I've been testing it recently for less volatile times. I'm still just in paper trading because I'm on the interactive brokers, but I'm switching from TOS to interactive. So I'm learning the interactive brokers platform while I'm doing this. But in trading, I've noticed that the stock behaves and follows these bands. So let's take another stock. Someone typed something. What was one of the earnings plays today? Actually, someone typed one of the earnings plays of today that maybe someone traded. Okay, Netflix is a very large stock, so let's try that one. I'll just use the data for today. I won't do the back testing one. That one takes a bit longer to load up. So Netflix just as a basis had a few touches to the VWAP. Bounce here. Yeah.
So maybe you can walk us through how you would have used this to trade Netflix, where you would have put it on, where you would have put stops, and where you would have took profit.
I'll just close the back testing because it's taking too much memory. Okay, so we have our bands here. Okay, so the previous day calculated the offset at 2.07, which is a nice round number, which is what you'll often see when you do when I calculate the offsets. They're often at nice round numbers. The Qs were at 1.018 for a few weeks. A few weeks ago was 1.018, almost to the dollar, which made anyone looking at the offsets as a dollar basis was right in terms of this. So you can see right here at the opening, uh, actually didn't move that much for an earnings play. So we have the two offsets across the VWAP, and the price just bounced across those two, um, and then all the way up to the second offset. So what you can do in this case, since this break was at 940, which I think Kenny does take some VWAP breaks around that time. He does like to have the market, well, sometimes it seems to like to have the market steady first before taking a trade in, like the first 5-10 minutes. Let that 5-10 minutes go around. And right here, we're exactly at 940 when the VWAP breaks happens, and you can take profits halfway at the band, and just take half positions every half bands. And you can see over here it touches almost all the way up to the second offset before breaking back down. And if you use a one band trailing stop, you'd be stopped out right under the first band. So you'd be taking profits halfway, taking profits on the other band, other halfway, and just lose maybe a quarter of your position depending on how much you'd be putting on, and you'd not be actually losing anything on this one if you have a one band. If you have a two band, you'd be losing just actually you'd still be in profits because the bands move with the price.
Right. So with this stock, Kenny would say he'd put on like 300 shares or something, and then he usually peels them out in 100 lot shares, depending on how big the stock is. So most of the time I see him, starting trades off with like 300 shares or something. Depends on how big it is. Today he went on something with 5,000 shares, but normally a larger stock like this, he's like 300 to 500. Then he gets rid of, I think, after a certain move, he gets rid of it so that he is in profit at that point and everything's covered. And then he takes a certain section out. So based on that, if you had a 300 share, how would you get out of it based on these VWAP bands?
On earnings, I'd be taking out half at the first band, and half my stop limit equals to 1.5 bands at first. So right over here, you see you have already half out at the two mark, which is the first band, $2 mark. If you have a 1 or 1.5 band, then you go up all the way here and back down, which would be 1.5 bands, which would be here. So you're still in profits even if you get stopped out. And even if you started at the beginning of the day, you might have been stopped out over here at 1.5 bands. Kenny also says that not to get out completely all of your position at the same price. So if you want to have one band, one offset for the first loss and two bands for the second, that's another possibility for those that have no commissions on their trading. As you can see over here, it goes almost the penny to the second offset, which would have been if it did not move with the market, which is fine. And then goes all the way down to the -2. So these kind of moves are extremely rare. 1, 2, 3, 4. This would only occur like 5% of the time over 30 days. And that's the kind of range you see, at least when I counted it with an index. I think it was either the Qs or the SPYs, which with more volatile stocks, you might have more bigger moves. I have not done the statistics to count all those moves of a bunch of different stocks. If you want to have fun, just consider the offset of $2 of Netflix. If you want to go and count 3 days worth of band movements, which would be $2 increments for each above the VWAP or below the VWAP. So from here, you see it go back up 1, 2, 3 bands. We're still in earnings, so it's kind of a bit more volatile in that case, and stops right to the previous day's close, which, as Kenny says, if you're going green, you buy, or if you're not going green, you sell. That's one possibility. In this case, it broke it just to kind of used it as support in this case.
It rejected it and then broke down
Yeah,
from that and
and
couldn't
broke
get
down to
above
the
it.
VWAP, back to the band, then back to the two bands right through, and then traded between the two bands, the -1 and the -2 for quite a while before it broke out between the first band and VWAP. And
So when it broke down back under the VWAP. It tried to make it above that the first band, and then it broke back down under the VWAP, and then it
correct.
stayed under there for the whole rest of the morning. And it did a really big, what do they call that? A faux show when you get over to, I guess around 1 o'clock. Is that 1 o'clock? No, that's 11:40. Yeah, around 1 o'clock, I think, 1:15, where it broke over the VWAP, faked people out, and then went back over the VWAP again. That's what they call a faux show, but not a faux show bro, because there wasn't a second breakdown there, but it was just right in the
Yeah.
middle there, that ass crack hit the VWAP, and that's a faux, and then it bounced off. So basically did the reverse. Ben's asking options because Netflix is pretty large cap and buying even 100. Yeah, you could do it in options, but you'd have to do it a lot faster. Because you get your butt kicked on the options, right? Because there's leverage in there. So a drop in the option magnified, or a drop in the stock's price is very much magnified. So you might not be able to take advantage of small moves. So it depends. That's why you have to get your option price really good, and you have to be even more strict on your options if you're
Yeah,
exiting.
options are very dangerous during morning of earnings.
Well, because there's,
Not
yeah,
correct.
because there's leverage.
Um, not only that the price can move so much, and you have slippage between the bid ask, but there's also volatility crush in the options. One possible move, if you have the stomach for it, would be to short a put if you're going long. Then you'd be getting some of that premium, because at some point around 11 o'clock, when it just trades flat from that day on, from that moment on, the volatility crushed from the earnings. And even if you're in profits with a long call, you could still be negative just because of the volatility crush. And that's one mistake that people do when they buy options before an earnings. The premiums are so high that even if they're supposed to be in profits in the next day, they're not because of the volatility crash.
Kenny never recommends buying options before the being in the options before earnings. He says it's a complete waste of premium. He just
Correct.
doesn't do it. And a lot of the times he says, just start on the day fresh with the options. Don't hold the options overnight unless it's the queues on a Monday, or sorry, on a Friday to Monday. That play seems to work out a lot. But generally, when I hear him talk about options, he tends to say don't hold it overnight and start fresh again with your options in the morning, because you're losing, what is it, the delta or something? I can't remember which one of the Greeks it is, that, or theta or something. You're burning theta, so you can pick it up the next day for cheaper because you've lost
Yeah,
that
one
percentage in it.
strategy that people tend to use um, that more professionals tend to use on earnings is short straddles, short strangles, um, if they have the capital to get the stock, buy the stock, if it doesn't go their way. So some professionals have so much capital that it doesn't matter to them to buy 100 shares of Netflix the next day because they have to hold it for a few days. So in that case, a strangle, they'll make money from that most of the time, but sometimes you'll have this odd time that you don't from the premium crush, where by selling a straddle or a strangle in either case, you're getting a lot of the premium just from the crush, but you have to be ready to buy the stock and hold it for a few days if it doesn't go your way.
Can we take a look at DraftKings? Because that one seems to piss Kenny off a lot. Let's see if that would have
Sure.
helped any of his trading. I think he tried to get a break on that, a 17. He likes whole number and half number breaks, so he was trying to get a quick flip, I think, in between 17.25 or 17 to 17.50, and he didn't get it. So be interesting
Just
to see how
before,
this,
just
if he
just
would have
before I
taken this
switch to
based on these.
DraftKings, I just want to show this part over here. You see how the stock keeps dragging down, but it keeps dragging down between the two bands and not from some kind of limit or trend or anything like that. The two trends are determined by the bands over here. Comes back up to the band and back down. So even if you're putting lines, okay, I'm going at this candle. If it breaks that candle, oh no. If it breaks down under this one, I close my position. In this case, if you're using the bands, you're never getting stopped out. Versus if you're using candles, because of the downtrend, you might get stopped out from that. That would be this part over here. Yeah. Zooming does not help, but you can see how it keeps bouncing between the two bands. If you had limits set to previous bars, you might have been stopped out. So if you had this as a limit, you've been stopped out. If you use this, you're stopped out. The only one, even this one might have stopped you out. So, alright, let's move to DraftKings.
Yeah, it was towards the end of the morning session today where he tried to catch that a whole number break, and it just kind of blew up in his face on that. It finally worked after he left the Raging Bull Pit, but yeah, Raging Bull Pit. But it didn't go anywhere before he left that, so it was kind of close to around 11 o'clock, 11:30, somewhere in there. It didn't. It was
Really?
like, I think this is
Okay,
the one.
because right here we
Didn't
see
make it.
the low of the day, the low of the morning, which I think I used the 15 minutes if I recall. The first 15 minutes, that's where it generates the high and the lows lines, the green lines over here. Actually, I'll put those bold just so I can see them.
Yeah, so for anyone that missed it, he's just highlighting the previous highs and lows of the pre-market and the previous day. Those lines kind of fade in and out. So you can see that the price bounces around them, but he was on a testing chart that wouldn't show these lines. So he's just bolding them up
Yeah,
for us
so
so we can see.
this one was okay. This one moved a lot because you see it goes down all the way to the. I'll just zoom in a little bit. Goes down all the way down, actually to the penny of the -1, all the way up to the next to the penny of the offset of the second band, then moves back down. This is traditional VWAP, back down to the -1, touches the, well, this creates this bar over here creates the morning lows. And this was close to the -2 band, and then we trade between the VWAPs. Actually, both VWAPs are at the same level, so that helps. And level 1, the first VWAP, we just trade around that before going slowly down to the -2. We see over here it bounces off the opening and the -1 band back to the multi-day, then crushes through almost to the morning lows, back to the -1 offset. See how it trails the -1 offset before going back down directly to the -2. And this could be your entry if you think it's going to change direction when it touches these bands, because these bands are equivalent to a multi-day. When jump,
That would have been right on that low is where it did a faux show. People were thinking, oh no, it's going to break down there. That's a faux show, and people are getting ready to get short, and
yeah,
then boom, it takes
I
off on
see
you.
why they would
That's one of those
go
faux
negative,
show.
because you're right under this green one, which would be the morning lows, and you're under the VWAP. But you see how it just touches the -2, and from there it just blows up all the way past the VWAP. Doesn't touch the first offset, which I would have expected to do at least one bounce off it. Just crawls through the multi-day and the VWAP before going back down to the -1 and bounce between VWAP opening. This one over here, this green one, is the opening day. So it just bounces between the -1 and the opening. Before it breaks down open, you have these two bars that are exactly on the open of the day, and then breaks the VWAP, crawls the VWAP, breaks 1, 2, 3, stops to the third, almost the penny, before going back down to the morning highs and back all the way up to
But
yesterday's
do
high to the penny.
but do you see how it tapped 3 times on that orange offset above the VWAP, and then once it broke that orange offset, then it really took off. So it kind of fluffled around the VWAP for a little, for most of the morning there. It touched it, it went down the open range, then it came up to it, then it kind of stayed above it, then it went down, did that faux show thing, then it came back up through the VWAP to the orange offset, then back down, and then later on in the day, right there where your mouse is, it finally broke that. So I'm guessing that's where Kenny would have
Yeah,
probably
and this
taken
over
his
here, you
long.
have the purple wine kind of color. That is yesterday's high. So you see how it almost touches that. Yeah,
Interesting that it popped right off that.
and those lines are so. When Kenny focused on that, on those lines, it blew my mind. After that, I always put those lines on my charts, and I saw how important those were. I always heard other traders talk about it and here and there theorize about it, just never took much of a grain of salt about it. And when he was showing his charts and I put them on my charts, and I've noticed that those levels are so important for resistance and support.
Well, this has been a really good primer on your chart. You've been talking at us for over an hour, so we should probably let you go for tonight so you can prepare for tomorrow. But yeah, this is a good primer. This is a good primer. So you got this recorded
Yes, I
so
hope
people
the
can watch it
volume
tomorrow, right?
is working. I see the green thing going up and down
Okay.
on the recorder. I didn't have time to test it.
But yeah, I'll put together a room that we can do like past screen shares or something so people can see this, and then maybe we can do some more stuff and take a look at those scanners that
Yeah,
you set up at another session or something. But I guess like an hour session is enough for today. This
if
got over it, so it's interesting. But thanks for showing me this chart. You keep putting them in the room, and I'm like, how do I read these? But yeah, so it would be good if you post this video, if you say what those different lines are. Like, so it's a bunch of VWAP offset bands, plus it has the standard highs and lows of previous time frames, those are the complete static horizontal lines, and those are the two key
Correct.
trading components of
Correct.
these charts, right?
And
Okay, well, it's great.
no problem.
Thank you
We
very much
can
for
do
doing
this
this.
again if
Good show.
maybe later. So
Yeah, yeah. Once now we know how to read them when you put them in the room, then we can look at them, and then we can
Yep.
maybe come back in a few days and go over some more once you've had a chance to compare.
and just if you want to do some coding, the offsets for the Qs right now are at 0.8 if I recall. So that gives you an idea of what the offset bands would be on the Qs.
Okay, that's great. All right, thanks everybody. Hope you guys had a good one with this, and talk to you all
Thank you.
later. Happy trading
Enjoy,
tomorrow.
guys.
Thanks.
Okay, so right here on the main. Okay, so in blue you have the VWAP. This is the 930 VWAP, which is usually the one that you have on every platform. It does not include the pre-market data, which I actually prefer versus the one with the pre-market. And above it, you have every steps of VWAP that is, I have an algorithm that calculates 30 days of data, and it calculates VWAP offsets. You have the yellow one, that's one level, then orange, then this kind of teal green, and then green. Pink is the average. It's rare that it actually ever goes above the pink.
So this is a 1 minute chart, just to recap. This is a 1 minute chart.